What's going on, everybody? Welcome into the Wednesday, November 27th, 2024 edition of the Daily Energy Newsbeat Stand-Up. Here are today's top headlines. First up, Trump energy agenda will have a heavy natural gas focus. Next up, staying on the politics train, Trump and the AI power boom are putting utility climate goals at risk. Dun, dun, dun. Next up, ExxonMobil, quote, "Don't expect drill, baby, drill under Trump." Interesting. I've got a lot of thoughts on this one. Finally, the OPEC Plus meeting is looming large over the oil markets. And then really the final article is Netherlands was a top destination for US LNG supplies in September. Stu will then toss it over me. I will quickly cover what happened in the oil and gas markets and quickly talk about a little JV between EQT and Blackstone. Very interesting. We'll talk about all of that and a bag of chips, guys. Because this is our last episode before Thanksgiving, I want to say right off the bat, happy Thanksgiving to everybody. We hope you get to spend some time off with friends and family. Even if you're around the world and you don't celebrate Thanksgiving, we hope you have a great couple days. But Stu, where do you want to begin?
Hey, let's start with our buddy, Mr. Trump. President Trump energy agenda will have a heavy natural gas focus. This article is a find on Forbes. It is actually from David Blackman, the David Blackman. I mean, not just a David Blackman. He is the David Blackman. This is a great article, and it kind of folds into the energy theme that we have for today, and that is natural gas, good, no energy, bad. The rationale invoked by the White House to justify the permitting interruption was to enable the Department of Energy to study and update economic environmental impact analysis associated with the LNG export business. To that end, the DOE is expected to issue a final report. And I don't think it really matters because President Trump put out on X, I don't care. I'm going to open it up.
I mean, hey, it's what needs to happen. I mean, it's probably part of why you're seeing natural gas prices spike right now. Obviously, we've rolled over into the new contracts. Some of that just has to do with us rolling into winter. But, you know, the world needs LNG. I covered it on my solo show on Monday, Stu. It's about to be cold in Europe. You know, they're going to be back to burning the shoes.
Oh, it's a horrible thing that's going on in Europe right now, Michael. And I've talked to George McMillan again, just as we were getting ready to get on this call. Not only did you and I laugh about a Sergeant Osla, the German, he's had 3 calls to Putin begging for gas now. This is a documented thing going, may I please have some gas? So if we watch Oliver and he goes up and goes, may I have some more cruel? Holy smokes. All right. So anyway, shout out to David. The natural gas is critical. And this next story, Trump and the AI power boom are putting utility climate risks at goal. I disagree, Michael, with this. Big utilities and climate goals are in peril because artificial intelligence turbocharges electricity demand, and Donald Trump's reelection signals policy shifts that would favor fossil fuels. I agree. But Michael, let's step back from this article a little bit and say the United States in the last 2 years has dropped their CO2 output by 22%. China has increased 220%. Okay. I see us needing more natural gas, which is not going to hurt the environment at all, period. And the only way we're going to get to Texas, ERCOT needs 2 times the amount of power in the next 5 years. The only way to do that is with natural gas. We can't permit enough right now with nuclear. So I don't see this as really being a big issue right now. The AI revolution is here and they need power.
Well, they do need power. It's why we've seen a lot of these people talking about small modular nuclear reactors. We've seen venture capital dip their toes into it more. It is going to be interesting. I think you bring up a great point, and this article does, about China. You know, if we can do all the cutting we want here at home, and China's just going to keep ramping up their use. So it really is netting out to be a gross increase. And, you know, I mean, we all know this, that emissions stay confined to the state. So if China pollutes, it just stays within China, right? That's how it works. Oh, no,
yeah.
wait. It goes everywhere.
That's right.
Oh, wait a second then. We're in trouble according to the climate people. So it's pretty unbelievable. I do think what you're going to have to see is from this energy council that Trump is putting together, they're going to have to solve the grid problem. They're going to have to attack the grid problem, and I hope they do it.
Oh, I think you've got Doug Bergen, who is going to be impactful for the oil and gas. You have Lee Zeldin, who is the EPA. If he can save trillions of dollars just on the EPA right there. And then you have Chris Wright. Holy smokes, Batman! You've got the trifecta of the hit squad. I mean, that is a great team.
And we do. It's true. It's true. All right, what's next? Let's move to Exxon.
Oh, let's go to Exxon. Don't expect drill, baby, drill under Trump. And I thought this was a great one. This is ExxonMobil upstream president Liam Mallon said, "We're not going to see anybody in drill, baby, drill mode," said at the Energy Intelligence Forum conference in London as it was carried by Reuters. "A radical change in production is unlikely because the vast majority, if not everybody, is focused on the economics of what they're doing." Michael, this is because the ESG newspaper hit all of the operators in the forehead all the way and went through their head and came out the back end, and they are going to be giving returns to their investors. This is what I see. This is a good thing.
Yeah, I mean, again, prices will only fall as much as oil production comes online. And if producers are signaling, hey, we're not necessarily going to be drill, baby, drill, we may even pull back a little bit in an effort to sustain prices, well, then, there's not much the president can do other than signal, hey, I want to drill, baby, drill. Well, how do you incentivize companies to drill? Well, you either have to subsidize them so that they can make up the incremental revenue that they're going to lose by bringing rigs online, lowering the oil price, or you bring on so much production that the drop in oil price, the net of it all ends up being more. I don't see either of those happening.
Right.
So what's going to happen? I think you're just going to see a little bit of a status quo. And I think that's what you've seen in the marketplace over the last 2 weeks is oil prices get down to that 65 range, spring back up. They've fallen a little bit today. We'll cover mainly why, a little bit of a ceasefire hopefully going on in the Israel conflict. But it'll be very interesting what happens. I do think what Exxon is signaling is kind of the thought among at least the larger mid caps. I know if you're a smaller guy, you may thinking about how it might be easier to crank out a few more rigs. It'll be very interesting to see what happens.
Oh, you bet. And so as we go to the next story, OPEC Plus meeting is looming large over the oil markets. I'll tell you what, this is everybody's got prudence on. If prudence is a boot, that could be a new brand name boot. A work boot called Prudence. There is very limited LNG capacity increases coming this winter. Oops.
Ooh.
So when you take a look at that article from Michael Kern at Oil Price, there's some really pretty good stuff in there. But I see the brakes are on just unlimited drill, baby, drill. Let's roll over. Just Netherlands was the top destination for LNG supplies in September. Netherlands really was taking it in, and also the prime destination of 588 BCF, followed by France with 493 BCF. The DOE report shows that the U.S. exported 363 BCF of LNG to 28 countries in September, up 4.8% from the same month. I'll tell you what, I think all of our countries around the world are thrilled that President Biden, is no longer going to be stumbling around the White House, canceling things. So I'm pretty excited about it.
Yeah, I think a lot of people are watching what OPEC is going to do. Some of the tea leaves that I've been seeing is that they're actually thinking of extending these production cuts into 2025. And depending on where Brent goes, I'm going to throw out, they may cut it a little bit. I mean, if they were signaling that they don't care where prices went in the face of a Trump victory, I think they would have continued to bring barrels back onto the market. They're not doing that. So the real question is why? Some theories say they don't have the spare capacity they claim they do. Who knows? Other people obviously are saying, well, they're they're so tied up in oil revenue that the math on a higher per barrel dollar per barrel actually is more valuable than more oil production. So it's that give and take from that standpoint.
And Michael, just as a side note, before we go off to your section, COP28 has been, COP29 has actually been hilarious. There's even more fallout coming out on it. And I have to hand it to Saudi Arabia again for going, we're going to keep drilling oil. And the heads exploded around the world. Over to you.
All right. Well, we'll do some oil and gas finance, guys. But before we do that, as always, we've got to pay the bills. Thank you for checking us out here on the world's greatest website, www.energynewsbeat.com. All the news and analysis that you've just heard is brought to you by said website. Stu and the team do a tremendous job making sure that website stays up to speed. Everything you need to know to be the tip of the spear when it comes to the energy and the oil and gas business. Go ahead and hit that description below. All the links to the timestamps, links to the articles if you are interested in learning more. You can also subscribe to our Substack, theenergynewsbeat.substack.com. We thank you to everybody who is subscribed there. We thank you to everybody who is subscribed via our YouTube channel. If you are listening on podcast and would like to do so, stop, pause, go to YouTube, subscribe to us. We really appreciate it. We also obviously put this out on video form. So if you are listening to this on audio, you are more than welcome to view this video. We like to throw in a little extra stuff there. You can see me throwing my hands around and all that. You know, I know everyone's going off for Thanksgiving, but if you are sitting at Thanksgiving wondering what your tax burden is going to look like, I have a solution for you. You don't need to worry about it. There is a solution. Taxes are so 2023. Move into 2024. Investing in oil and gas, the best way to lower your tax burden. Go ahead and hit our link in the description below or investinoil.energynewsbeat.com. We will get you all the information on how oil and gas investments can help lower your tax burden, can also diversify your portfolio, give you a nice little monthly dividend, and become Billy Bob Thornton from Landman. I mean, that's really what you want. It's really what you want. If you want to be able to yell, specifically if you're at Thanksgiving and you want to be able to lecture your family about how renewables suck, the best way to do that is invest in oil and gas so that you can actually say, hey, I'm an oil man. I know what I'm talking about. But truly, if you have a tax burden, we'll get you all the information. Investinoil.energynewsbeat.com. Become Billy Bob Thornton from Landman. Let's dive over here. I mean, Stu, let's go ahead and just look at, top line indices. Stock market above 6,000 again, up 3.5% or up a third of a percentage point. NASDAQ up just about the same, sitting above 20,800. 2 and 10-year yields spike. The 10-year yield's actually up about a full percentage point, mainly off the back of these tariffs that Trump is now dropping on Canada and Mexico. We might talk a little bit about that. Dollar index up about a third of a percentage point. Bitcoin down to $92,000 after shedding about 1.5%. Crude oils dropped about 13 cents or about 0.2 of a percentage point. Brent oil down 1.3 percentage points. Natural gas up 2 percentage points, $3.46. XOP contract has fallen about 1 full percentage point. Specifically on oil, main reason we've seen some downward pressure is there's an agreed ceasefire between Israel and Lebanon, which is great for the region. Brings down that geopolitical tension. Obviously, there's still the stuff going on with Hezbollah and all that. We talked a little bit about OPEC Plus beginning discussions. Again, the tea leaves coming out of that meeting is that they're going to delay the output. If you agree with our friends at Reuters, well, guess what? Mostly what's going to happen is they're going to defer these production increases and just an attempt to keep Brent where it's at. Speaking of those tariffs, Stu, I want kind of your thoughts on it. Mainly why oil has moved positively is Canada. They've come out and said that this tariff that they're going to put a 25% tariff on all products coming into the United States from Mexico and Canada. We import a lot of oil from Canada, and that would apply to the oil. So talk a little bit about these tariffs from your end, what you're hearing, and then I'll sort of opine on it from there.
Well, first off, it came out as a post on X from President Trump. And within, I believe, 20 minutes after President Trump said he was going to tariff everything from Mexico and Canada if they don't control their borders, I believe Trudeau was on the phone going, Monsieur Trump, President El Trumpo, would you please not tariff me because Mexico's border is worse than mine?
Well,
So
I think that's a critical piece, is that he did not say he's going to put tariffs on it. He's threatening to put tariffs on it if they do
exactly.
not help control the flow of illegal aliens. And you're right. The Mexican president, she came out within 12 hours, I think, and was basically like, okay, yeah, we'll stop the migrant flows. It's like, oh, so it's like when Newsom cleaned up San Francisco in 20 minutes when the Chinese president showed up. It was like, oh, so it was just that easy.
Exactly. So it's just a matter of, perspective. And tariffs are not always bad. I think if if they're used as a club to get what you need, they're in a good sense.
Yeah, no, absolutely. Absolutely. The only other thing, Stu, that I saw that was very interesting, this actually happened yesterday. EQT announced $3.5 billion joint midstream venture with Blackstone Credit and Insurance. Spooky stuff. Mainly what they're doing is, this is all part of a debt reduction program that EQT is attempting to do in their acquisition of Equinix. As you remember, that happened early this year. Basically, what they're doing is they're taking their midstream assets, specifically the Mountain Valley Pipeline, the Hammerhead Pipeline, and a few other sources, and spinning that into a joint venture. And with Blackstone Credit and Insurance, will basically take a non-controlling equity stake in that in return for about 3.5 billion of cash that values this new quote joint venture at around 8.8 billion, or about 12 times EBITDA, which is pretty intense multiple specifically for these midstream assets. I think, again, it goes to show you how midstream physical pipelines are becoming more and more valuable. It'll be interesting to see, if we look back in 5 years from now, whether or not this was a good deal or not, because if pipelines still struggle to get built, and obviously I think regulation's going to get rolled back with Trump, but if we can't build more, this will look like a terrible price. But if all of a sudden pipelines become ubiquitous, if Trump comes in and Doug Burgum and Chris Wright come in and just say, we're laying pipelines everywhere, then this will look like a great deal, because that multiple over the years is going to go down, because it's the reason why it's so high right now is because there are no pipelines. So I think they're making a strategic move right now, saying, we believe that this is the highest multiple this joint venture will ever be. Let's monetize it, use the high valuation to pay down debt. Now, they're partnering with Blackstone, so who knows what's going to happen there. And again, Blackstone is not BlackRock, so we'll cut them a little credit there. They're not necessarily partnering with the evil empire, and they're mainly doing it, again, this is on a debt side for a debt reduction. They say that basically they're going to use this all for debt reduction, and they'll on a pro forma basis exit this year with about $9 billion of net debt, which is pretty good for the size of EQT. So I think this is a smart move if you look and kind of forward forecast where the valuations of these midstream pipelines would be. If your assumption is what Trump's going to do under his energy policy is going to just blow through and approve these pipelines, they're going to get built, then this 12x multiple that they're getting is that could be 6-7x in 4 years. And guess what? You got a great deal then if you got it right now. So I think this is a great deal from EQT side, and it gets Blackstone again in on some of this physical stuff. So I think it's super interesting. But this is our last show of the week, Stu. We'll run. Who do we have in the hopper? You'll hear Thursday and Friday.
In the hopper, we have Matt Wheeler, Managing Director of Capital Markets, and we have NJ Anuk and Robert Brooks from RBAC.
Nice. Those will be great. We love Phoenix Capital Group over there, so that'll be a very interesting one there. And then we also love our good friend Robert Brooks, so that'll be great. We will be then back in the chair for our weekly recap on Saturday, and then we will be full-blown back for a full week of production starting next week. We hope everybody has a great Thanksgiving. We hope you're able to enjoy it with friends, family, and if you're not, well, guess what? Go binge Energy Newsbeat stuff all weekend, and we will keep you busy. For Stuart Turley, I'm Michael Tanner. Guys, we'll let you get out of here. See you next week.